If you own a home, you feel rich. If you don't, you're wondering how you're going to pay for it. Something's wrong. Good morning, good evening, good afternoon, wherever you are, whenever you are. Thank you for watching this video. My name is Da Vinci. I'm in the pipe 5x5 here in Dubai, where real estate prices are just absolutely insane. I got a call saying, hey, you want two houses, 2 for 1, right? For only 200 million dirhams. That's 60 million or 55 million dollars. I'm like, what fool do you think I am? Do you think that I'm going to put that kind of cash, that kind of work energy into a house? He's like, well, it's just going to go up in value. It's a high value property. You mean to tell me that this house, right, that these two houses, right, are worth more, right, in work energy than, let's say, $80,000 a month, right? That you can, the $80,000 is like nothing. It's pennies. It's like you're practically broke for the rest of your life, right? You can even double that probably and still invest the rest and still be able to live forever off of that. Wow. The idiocracy of home prices shocks the hell out of me. Like even the average price of a home at $400,000 is absolutely ridiculous. Ridiculous. Why? Well, we have to take a look at the value of money. How much does it take to work, for the average person to work, save, and buy that house? Okay? So the average salary is around 50K. And so how many years of like not even saving every single penny he's got to pay off to buy that house? Ooh, right? It's like 8 years. This is insane. This is madness. Madness. In reality, right? The best he could do, right, is go save 40% a month, because he can't save everything. 40% a month, right, to pay for that house. 40%. So if we were to just say 50%, which would be absolutely sick, right? That'd take even 16 years. And with the fact that the houses are constantly going up in price, he never can save enough money to buy that house, right? This is why real estate is a scam, right? It should, these prices are just not logical. Not logical at all. You can't save your way to buying a home. So effectively, what is the real value of a home? Because this is fake, right? This value comes from someone being able to print money and buy a house. And if that's the case, right, then if they stop being able to print money and buy a house, what would be the real value of a house? Ooh. Yeah, it's what you can work and save for it in a very short amount of time, right? How short is that? Like 2 to 3 years. Whoops. So effectively, a house that's for an average size house is really effectively worth maybe $25,000 to $50,000, or even at the high end, $75,000 in today's money. And that's not all. That's not all. If I were to compare Bitcoin to real estate, it would be hands down the sensible thing to do is to buy Bitcoin, because that is real value of work energy going into something that is an asset that's easy to transfer, limited in supply, whilst houses are not, right? Well, yes, you can agree. Houses are something tangible, right? Let's read what it says here. For generations, conventional wisdom has dictated that real estate is one of the safest, most reliable ways to store wealth until the day it isn't. Right? And it is, and that day's coming, right? Real estate is tangible. You can touch it, you live in it, you pass it down for enjoyment of your children, grandchildren. It's physicality that has given real estate its status as a foundational asset class for wealth preservation. Now, this is not going to change for a while yet. It's not going to change until there's a financial collapse and the US dollar collapses, and then everybody who thinks that they have some real wealth, they feel rich, holding a house, they'll realize, oh, shoot, damn, where did all the value of my money go? It's worth trillions, my house, but I can't buy anything with it. What's going on? Yeah, because the money, right, basically gave you the false sense of security, right? And also in this they talk about the difference between Bitcoin being physical, right, and not being able to touch, but natural disasters can destroy that house. Also, governments can destroy that house, take the house from you, and create all kinds of issues, right? So once the house drops to its real value, people are going to be left with nothing. So I would suggest you mortgage your home, right? Because everybody's talking about how expensive a house is, and they don't understand why. It's because they're printing more money. And then people who print that money, which they go into debt and buy it, they get to buy a house with printed money and raise the price. So let that sink in for a second. All right. I'm doing this live in front of an audience, and they are leaving questions and stuff like that and cheering me on. I really appreciate it. Here, I forgot to put this mic here. They just mentioned that. I just saw that over the side there. Hopefully you guys could hear me well. And yeah, I preferred not using this mic actually. But anyways, if you're interested in watching this live and meeting with me and chatting with me, you can do so by signing up to levex.davincij15.com, and you can sign up here, and then boom, you can actually see me live. Okay. Also, we're doing some trading here at weex.davincij15.com. We've got we're $38,000 in profits here, and a few $100s in profit on the Ethereum trade because we went too late on that one. Also, you can check out Bybit, which is easier to trade on. Bybit, assuming that you have, like, for example, ID outside of the United States and other countries. But Weex works everywhere, right? Doesn't matter. If you live in the homeland of the free, or not so free, and the home of the brave, or not so brave, but whatever, right? You can actually trade at weex.davincij15.com. All right, links in the description below. Let's move on to trading. Okay, we can see that, damn, that's not good. Big M here on Bitcoin on the four hour. We could end up rolling down all the way down to the bottom of this trend line, upward trend line. Wouldn't surprise me, but there's some people who have like massive leverage trades that get liquidated right just below the what's it called, 108,000. So I'm like, what the hell? These people are crazy. Right? We'll look at that in a second. Looking at Solana, this doesn't look uppy to me. Same with Ethereum. Things are not looking so hot. So a short-term trade looks like we can do shorts on both these assets. But let's take a look at the heat maps. Bitcoin, right? Oh no, this is Solana. Solana has more liquidity up than it does down, so that's positive. But most of the time, Solana's liquidity is mostly upwards, in an upwards direction than downwards. But there is some building at the lower levels at around the 168, 160, 69. So yeah, there we go. Looking at Ethereum, more to the upside than the downside. So chances are they could go for that first. Looking at Bitcoin, more to the downside than there is to the upside. This says there's a lot up here spread out, but yeah, there's a lot more concentrated on the lower levels and closer to the what's it called, the in the $105,000 area, $106,000 area. So wouldn't be surprised if we come and take that out before we go higher. So I'm to wonder how this person would do that, go get liquidated around here. I guess he's just, got big money to spend and doesn't mind spending it on trades that are quite risky. Right? And some people have, because the money printing is pervasive. Right? If you have access to the printing press, you can make stupid gambles, and it doesn't really matter. You just print some more. Right? Doesn't really matter. Right? You're just gambling for fun, and so that's probably what it is. Right? He's just has access to printing press money, and he's doing well that way. Okay, well, that's it for today. I hope you enjoyed today's episode. We'll see you guys next time. Peace.